Good afternoon and welcome back to another edition of NCIA's Industry Essentials Educational Webinars. I'm Brian Gilbert and I'm thrilled to kick off another episode of our Committee Insights series today, being produced by our Marketing and Advertising Committee. For those of you all who are just joining in, as which I saw there are a number of you, our Industry Essentials Educational Webinar Series is NCIA's premier digital educational platform featuring a variety of interactive programming, all designed to provide you timely, engaging, and essential education when and where your team needs it most. This NCIA Committee Insights Series showcases content produced in partnership with one of our 15 member-led committees. All right, well, enough with this canned intro. I know why you all are really here, so let's get on to the main event. Right with that, I'd like to turn it right over to Jake Kuzarek, the moderator for today's conversation. So with that, Jake, you can kick it off right from here and take it away. I hope I didn't butcher your name. I was trying before I started.
Oh, no worries. It's flawless and it's par for the course story of my life. But it's great to have everybody here today. Thank you all for being here and welcome to the final Industry Essentials webinar of 2022 that is put on by the Marketing and Advertising Committee of the National Cannabis Industry Association. There are two more webinars before the end of the year, but this is the last one that the Marketing and Advertising Committee will be putting on. Today, myself, Jake Kuzarek, and our esteemed panelists of Christine, Jeff, and Aaron are ecstatic to bring you how to use marketing mindset to raise capital for your cannabis company. We couldn't have asked for a more perfect panel. We'll all truly be learning from masters this afternoon. Now, we all know raising capital in cannabis, particularly right now, is pretty tough. But what should you be doing as a founder from a marketing perspective to get ready to attract those checks in 2023 and beyond? Now, I'm sure you've all seen the headlines. In the past year, roughly 95% of all cultivation and retail investment has been debt. Yikes. While debt is certainly an option for some, especially those with existing revenue, not everyone is in the same boat. Fortunately, there's never been a better time than now to start exploring the wide range of different fundraising vehicles, from SPVs to revenue-based financing to the many crowdfunding platforms. But enough out of me. I'm just here to moderate. So let's shift gears and give each one of our panelists a chance to introduce themselves and a bit about their backgrounds. Let's kick it over to Aaron.
Yeah, hi. Thank you so much, Jake and NCIA, for having us here. I'm grateful to be here today. My computer says it's playing music, so if something happens, let me know. Of course it does right now. A little bit about my background. I'm a chemical engineer, Lean Six Sigma black belt in corporate, 11 years, love building a business on a big balance sheet for companies, and then ventured out with my love and passion for cannabis to build a business for myself and for my friends around products and community we needed. I founded Garden Society in 2016 with my co-founder, Carly Warner, and we've been slowly growing and really just fighting to live another day in this industry. I'm excited for this conversation because fundraising was very new to me as I was starting to build Garden Society, and we have done 4 successful. We're in the midst of our 4th round. And so, there's a lot I've learned and a lot that I think I can share to other entrepreneurs and founders of things we did really well and things we did really bad along the way, to hope that people have as much or more success than we've had and can really help everyone raise all boats by raising the tides. So thank you very much, and I look forward to the discussion.
Thank you, Aaron. Let's turn it over to Jeff.
Hi, everyone. Thank you for having me today. Very excited to be here, especially amongst the other panelists. I've spent most of my career, or the beginning phase of my career, as an entrepreneur and operator in New York City. I've been part of the founding team of a few successful tech startups, a few advertising agencies, and a few epic failures. I have been a venture partner in the traditional space, but have been solely focused on the cannabis sector since the summer of 2016. I was a venture partner at a cannabis-focused fund in LA for about a year. I've lived on a cannabis farm in Northern California for about 6 months, which was probably my favorite stint in cannabis so far. And I've been back on the East Coast since the summer of 2019 and have consulted across the supply chain. I've worked with, the big publicly traded operators, Canopy, Acreage, GTI, and Cresco. And I've also worked on the other side of the spectrum in helping mom and pop operators get started. So excited to share some of the, battle wounds that I have from over the years.
Well, you learn the most from the struggles. So let's turn things over to Christine. I'd love to get your background as well.
Sure. Well, my background is that we started in the legacy market around 2015. So we are one of the legacy folks that you're normally hearing about that transitioned to the legal market. So we're that company. We started, like I said, in 2015, transitioned to the legal market in 2018. We are a conglomerate of companies at this point. We have a holdings company, and now we have several companies underneath the holdings company. And we learned a lot in the beginning days of trying to transition into the legal market, and then really just got slapped in the face when we started to try to fundraise. And much like Aaron and I came up together. I remember us being at this one conference and we were talking about that, and we were like, oh my God, this is so hard. But it was mostly hard because we just didn't know, right? We were not part of the conversations. We didn't come out of Silicon Valley. We didn't get MBAs from Harvard or Carnegie Mellon. We didn't have the golf course buddies that other people had. We didn't have people that would just write us $1 million checks because they liked our shoes, right? So like we were just not that group. And so what I'm real excited about to talk about today is all the things that we have learned and how to create your own circle of people that trust your vision, your company, and what you want to do, and how marketing really is important to that. Because even people that that are in circle, or people that you're going to meet through people in your circle, don't know anything about you. So how do you convey that quickly? And really, marketing is the best way to do that.
Absolutely. And community can make all the difference.
Mm-hmm.
Well, let's start one by one, having each of you share a little bit about your recent experience fundraising or investing in cannabis companies. Let's start with Aaron. So tell me about the differences in closing your last round, your 7 million Series A.
Yeah, so when we started the company, Christine and I had many conversations commiserating. When we started the company, we also started in the legacy market. We didn't do our first financing until 2018. And there was a huge learning curve for me. I didn't understand how investors invested or why investors had thesis. I just knew I was reading about these investors and these newsletters, and I needed to go pitch them. And so the biggest thing for me, I think, from the early days is understanding who is going to invest in your company by understanding what stage your company is in, truly. I would go to the big funds and the venture groups and this and that, and I had $100,000 business and I wanted $50,000 checks. And so these businesses were not going to invest in me. I wasted so much time in that. And so once I figured that out, I really went for this angel group. I had a lot of authenticity questions. Being a woman in the industry, you're not very good or authentic because so-and-so didn't invest in you. Well, let me prove you wrong. And we basically did our first initial few convertible notes or safe notes on finding people who believed in our vision, who were angel investors, and getting small checks. It was a ton of work, but it allowed us to breathe authenticity, and it created so much value into the business. Then when we went to our $7 million Series A, as your business grows, your sophistication on raising capital has to grow as well, right? So we were getting we were having different conversations with different people. All of our investors are high net worth. They're all people who believe in us. They're all people who stand for diversity and value women founders and what we stand for. We have an incredible cap table of investors who see our vision. And now as we're building multi-state factories, so most people probably saw, we have California, we stood up a factory in Ohio, we just won in Jersey. So now we're even going to a higher level of sophistication. And so for me, the biggest thing is like understanding what you're raising for and understanding what type of investor is going to invest in that business, because everybody has different mandates for different things. And you waste a ton of time if you're a small business going to a large fund or a large business going to an angel investor, right? And so that was really my education that got us into the Series A, and now has really propelled us into this new phase of growth.
True. And I understand 300,000 plus came in via an oversubscribed SPV. So what was the process there? How did you select who was going to run it for you?
Yeah, so what was really interesting in my journey with raising capital is how few women actually invest. So I think everybody knows how little capital women founders receive. And I was like, women support women, what is the deal? And I had 11 different men tell me that we weren't very good or authentic because no woman believed in me and no woman was an investor in me. And I was like, well, I'll prove you wrong. We have all these women investors. And so we set out on our early stage to build an angel slate of women who were from the industry and from outside of the industry, who saw our vision, believed in us, and would write us a small check. And through that journey, I realized how few women got access to deal flow, how few women knew what a safe note was. They didn't understand diligence. Like, there was this huge learning deficit that I realized that were women not only receiving capital, but also deploying capital as investors. And so we did this angel slate. One of those women introduced us to our lead investor for our Series A. One of those women introduced us to our opportunity in Ohio. And then one of those women actually ran the SPV in the spirit of facilitating a diverse cap table as a diverse founder. So it's not just about raising money from the country club guys that we know are there, but it's about how do we really walk those values across all levels of our business. So one of those women who was an angel investor said, I see what you're building. I believe in you. I want to expand this. I understand your focus on diversity. And so we ran, as part of our Series A, we had an allocation of 250,000. We oversubscribed it to 320 of women of color of New York to really walk that out loud and really ensure that women specifically were getting access to our cap table at every step of the funding process. So it was incredible. It's about timing. I think it's about champions. It's about really authentic relationships and like people really believing in you and you being really vulnerable and honest and building that rapport, which takes a long time to build. But our investor who ran that SPV did an incredible job, and we're just so proud. And that we call our ladies slate. So we get all of our female investors together on a quarterly basis, and we have incredible conversations, and they just leapfrog our business forward.
I love it. I mean, you got to have the right investors. You're going to be in bed for them for 5, 6, 7, 8 years at minimum. So it's just as important of finding investors that are a good fit for you.
It was probably more work than like going to a fund and getting a large check for sure, because there was a lot of conversations involved to get a little check. But I'm really proud of it, and I just, it's what's really awesome too is to see those same women invest in more companies and have more confidence in what they're doing and like realize there's a seat at the table for them, not just within Garden Society, but across the ecosystem. So that's really cool.
So Garden Society is a B Corp, which is amazing to see. I wish this was a common trend in cannabis. More people were doing it. But can you share a bit about that process, and did it catalyze a certain type of investor to get involved in your round?
I don't think people care. I don't think people really understand B Corps. I feel like we are a benefit corporation because that gives us a fiduciary responsibility to our mission, not just to our shareholders. So we worked with Hanson Bridget out of San Francisco, who does a lot of B Corp work. We're not B Corp certified because B Corp certifications don't qualify for recreational marijuana, unfortunately. So it's a policy issue on their side. But we are a benefit corporation in our corporate documentation within Delaware. And so what's been amazing about it is as we really build product and community for women and focus on women's health and women's mental health, our CSR program, our mission, our vision, it's all part of our B Corporation and gives us that coverage from a shareholder point of view. So we are serving our mission. We're also serving our shareholders, but if there were ever to be a conflict down the road, we incorporate it in a way where we can really execute our vision and be protected.
Garden Society was pretty strategic about who it accepted money from, but what other value have your investors driven for the organization?
Well, we said no to quite a few people. I'm not going to lie. Like in the early days, not all money is good money. And if you don't feel good about it, you walk away and find another way, because the best thing we did was have the courage to say no, especially to predatory situations where I've seen a lot of my friends get into very difficult situations because they didn't say no. And sometimes you need it. Like sometimes it is what it is. But like if you really are honest that you don't have to do it and you have the courage to have faith in yourself, like that's my biggest advice is believe in yourself, right? Other than that, our investors have been tremendous. They've opened retail doors for us. They've opened strategic partnerships for us. They've introduced us to other investors. They have done a tremendous amount of things to help me personally with like managing my workload. And, I can call them and say, hey, can you figure this out for me? Or can we work on this together? It's more like brain power and brain capacity. We treat our investors like advisors. We are very transparent, probably to a fault, some would say. But that's also built really authentic relationships with us and allowed our investors to come along with us on the journey and really continue to support us to today.
Thanks, Aaron. And we're going to circle back, of course. We're going to end this webinar with some open response questions. So every one of our panelists will have a chance to jump in. But we're shifting gears a little bit, heading over to Jeff Arbour, who has had multiple successful exits before, notably as CEO and co-founder of digital marketing platform Flive. And he's worked with heavy hitting enterprise players like Toyota, L'Oreal, and Coca-Cola. He's the CMO of Bridge City Collective and Indie MSO with licenses in 6 states now, raising capital for an additional 4 of these. So if anybody can speak to the intersection of marketing and fundraising, I'm getting a sense it's Jeff. Jeff, how does the fundraising process within cannabis differ from fundraising within tech or media?
I mean, first and foremost, it's a lot harder, right? There's just significantly less investors deploying capital in the cannabis space than the tech sector. So just from a sheer numbers standpoint, the amount of available dollars is a fraction of what it would be in tech. I think the other reality is, because angel investing, early stage investing has been such a big part of building technology companies for such a long time, there are very clearly defined investment vehicles that are looking to deploy capital at every step of your business. There's like pre-product funds, post-product seed funds, angel funds, super angel funds, post-idea, pre-idea funds, and then for every step thereafter, there's a number of Series A funds, Series B funds, leading right to your mezz round and ideally your IPO. In cannabis, that's just not the case, right? There's not nearly as many, sophisticated institutional funds. And then in addition to that, the angel and early stage investment pool is significantly smaller as well. And that has to do with a number of factors. Some of it is, 280E, some of it is, the safe and banking. And then just in addition, there hasn't been, the number of exits in cannabis like there has been in tech, which fuels that early stage investor, community. So, I think when you're looking to raise capital in cannabis, the first thing to do, which Aaron brought up, is make sure that these investors are investing in the sector. Because there's certainly a significant number of funds that are actually blocked from investing in cannabis at this point.
Yeah, I think you mentioned it before, but really building a marketing machine, and prepping before you go out there and start sending these emails and soliciting potential investors is absolutely key. And I understand you're in the midst of 2 different raises right now. You've raised for Nana and Pop, Chameleon Collective, Bridge City Collective, and you've even given money back to investors, which is crazy and amazing. What tips and tricks are you leveraging to stand out in such a crowded pack?
Yeah, I mean, I think like when I approach a fundraising round or when I'm working with a company that's approaching a fundraising round, we really look at it like it's an advertising campaign or a marketing campaign or a sales push, right? And so I think like, again, leading back to Aaron's point, like the first step in the first stage is really like your planning stage, right? And this is where you want to identify who your target customer is, or, in this case, who your target investor is. And in many cases, that's going to be dictated by the stage of the business and also the size of the check, right? Or the size of the round and what you're looking to raise. If you're looking to raise, 1 or 2, maybe 3 million, and you're not a very advanced company, you're probably going to be looking more towards like individual investors, angel investors, high net worth, maybe some family offices. And in most cases, these are going to be smaller check sizes. These are going to be $25,000, $50,000, $100,000 checks. These types of investors, they invest in a lot of early stage companies in many cases. And, it's a very different approach than if you're going more towards larger check size and institutional funds. So if you're raising over a few $1 million, trying to get there through $25,000 checks is really, really difficult. It's like wrangling cats. And so, the check size will dictate really who that target customer is and save you a lot of time and frustration. And so once you kind of have that figured out, you know who you're going for, or at least you have some sort of filter to identify, like, are they a potential customer? What's the likelihood there? You know, I always recommend investing significant time in like the planning process, right? Like really figure out, you know, who all these potential investors are, start a list, you know, do research online, you know, attend events, watch seminars like this, and try and build a really large list of not only potential investors, but also people who could potentially introduce you to a pool of investors, right? And sort of that recommendation is an introduction is going to create that warm contact. So like phase one, the planning, like get as much done in this phase as you can, you know, get all your marketing collateral created, get your investment deck done, you know, create your financial model, make sure that your financial model and your financial story aligns with the story and the vision you're telling in your deck. You know, if your investors prefer investor memos, which I know Christine will talk about, make sure you have one ready to go. Because, you know, once you move into planning or you move beyond the planning stage into like the actual outbound or outreach or execution of the fundraising campaign, you want to spend as much of that time and focus on like closing deals, you know, and making sure that those investors get across the goal line versus creating collateral. And so, you know, so step one, planning, step two, execution, and then step three is really optimization, right? Like once you've gone out, you've had a lot of conversations, you know, you sent your deck out, you've gotten feedback on your model, what does and does not make sense to change in your story? You know, all investors are going to have opinions, right? And some of them are going to be good and some of them are going to be bad. But at the end of the day, if your target customer and your target audience is giving you consistent feedback on your deck or your business model, you might want to look and see if it makes sense to re-engineer things. And so like the last little bit of advice is don't get discouraged, right? Like this is hard for everyone. You know, the largest MSOs in the world are having a very difficult time raising equity capital, and, you know, the early startups is as well. So, you know, go in with an open mind, you know, try and build your community along the way, other founders that have either gone through it or going through it with you. And just realize that it's not an easy process for anyone. And you just got to keep going. The only time you fail is if you quit. And so just repetition.
Excellent. And of course, you know, you got to be in a position to actually accept the money if you're asking for the money.
This is true.
Well, as you know, Chameleon Collective obviously does incredible work. How critical is it to have a polished, professional, cohesive brand identity if you're out there fundraising? What degree of importance do you place in an attractive landing page, pitch deck? You know, can any of this kill a deal?
I mean, I think it's everything, right? You kind of only have one opportunity to get in front of these investors. And in many cases, they're seeing a lot of deals. And so if you have an opportunity to have a conversation, or if you have an opportunity for someone to review your deck or review your model, you want to make sure that it's at the highest level possible. You know, every interaction with an investor is like a job interview, right? They're not only looking at, you know, the business, the mechanics of the business, the financial models, but they're looking at the operators. You know, like how do you deal with under stress? You know, are your answers consistent, you know, in each and every conversation? And so, you know, just realize that, you know, when you have an opportunity to meet with an investor, I would take advantage of it simply because there's just not that many of them out there. And so, you know, in my younger days, I thought it was all about a flashy deck and a vision. And in my older years, I've come to realize the importance of like a financial model. And so, you know, make sure that the numbers work out, right? You know, entrepreneurs lie, you know, or over embellish. Math doesn't. And so, you know, at the end of the day, these investors are looking for businesses that are going to return capital. And so there needs to be core mechanics behind the vision.
Absolutely. And now what's the difference between an asset light operation and something fully vertically integrated with all of the assets? How does fundraising differ?
So, the advantage of an MSO with assets is that you can borrow against the assets, right? And so in a limited license market, the minute you receive a license, and especially if it's attached to a piece of real estate, it has value. And so in an asset heavy model, you have a lot more optionality around debt. And those types of businesses require significant capital to stand them up. And it's really, really difficult, again, to get equity capital. So, at this stage, I would say it's probably, if there's a vertical entity out there that's able to raise all equity to stand up their operation, I would be very, very impressed. An asset light business, it's a little bit less of a cost, but the investment goes into marketing and advertising. And so, the X's and O's behind assets for a private equity investor is much easier to understand than user acquisition to lifetime value, CAC to lifetime value, customer acquisition cost to lifetime value, which is how you measure brand businesses or e-commerce businesses, right? And so, again, it's really key to know who the investor is, what they're looking for, and make sure that aligns accordingly. Private equity investors are less likely to invest in asset light type companies. But the advantage of an asset light business is it opens up the wheelhouse to more potential investors. So if you're not touching 280, you're not touching the flower, and you're not exposed to 280E, there are some more traditional funds that are deploying capital in cannabis. Great Oak Ventures is a great fund here in New York. I know they're putting capital behind cannabis technology companies. Lear Ventures, they've done quite a few cannabis companies. That's like the founding team behind like Thrillist and a bunch of media properties in New York, big investors. I think Tiger Global was involved in Dutchie's latest round. So there are more of these institutional funds trickling into the space. I would say there's a lot of desire for those types of funds to deploy capital in the space. But because of 280E and the ways that the rules and regulations are written in those funds, they simply can't invest in cannabis businesses yet. And so, as banking passes and 280E gets, we no longer have to deal with that. It is going to open up the world to a whole new pool of investors, which is hopefully coming sooner than later.
We can only hope. Knock on wood. And you've been on the other side of the table. Any questions, any tangible examples, any lessons that a new founder, for new founders when it comes to putting out a sophisticated pitch that's going to catch some attention?
Yeah, try and meet with as many people that have done this before as possible. There's some great resources out there of investment decks that have worked, which wasn't readily available 4, 5, 6 years ago. In ancillary sectors, there's some pitch book depositories of cannabis investors. Really look at what's out there, and don't be afraid to ask for help. If you have a friend that's a good designer, a good writer, or a good deck writer, take them out to dinner and have them help you write your deck. Show it to as many people as possible before you show it to investors. Because again, you want to make sure that the story is coming across to the audience and they're really, understanding not only the vision, but sort of the business mechanics behind everything.
I love that. Pitch your friends, pitch your family, pitch your Uber driver. You need varying data points of feedback to dial this thing in. I don't think I would trust a deck that was V1, V20.
Yeah, and keep it standard. There's a very standard, 10 slides to a perfect pitch deck, whether it's like Guy Kawasaki or like Dave McClure or, Y Combinator, they all kind of have this very, concise format.
But I kind of disagree.
What's that?
Your deck is an evolution. It's never done. You pitch
Totally
this guy, you tweak it, you pitch that guy, you tweak it, and perfectionism is the devil of an entrepreneur.
It's the enemy of done, 100%.
You gotta just start. You can't show it to 100 people before you start. You gotta just have you gotta have the basics down, right? But you gotta just start and listen to feedback and evolve.
Yeah, I
Because your
agree.
deck
You
is
know,
going to change almost I would change my deck almost every time I presented it. I'd tweak this.
that's
I'd
step
add that,
three,
listen to
right?
feedback.
Step one, planning. Step two, execution. Step three, optimization, right? And that's that constant iterating, right? That's
Yeah.
that feedback loop in the adjustments. I completely agree with you.
Excellent. There's a Slide Bean Ultimate presentation guide that I'm gonna find and drop into the chat that has the Guy Kawasaki A16Z 500, the format they look for, and you can do with that what you choose.
Well,
Well,
then
Chris,
you're going to have an
helps
investor
you, like,
who's going to say,
figure out
I
your
want this
business.
slide, and I want that slide, and I want to see this, and I want to see that. And like, you're never going to
Yeah,
get
I
it
mean, the
all.
advantage of like putting, explaining your business through that framework is it really forces you to think it through. You know, it really forces you to be very concise. It forces you to create those sound bites that are going to create, you know, recognition when you're not with the investor, you know, when they're with their investment community. And so, you know, the advantages of those decks is it forces you to create a really concise story, because confusing stories, confusing businesses are expensive, right? They're expensive to fund, they're expensive to invest, and their likelihood of success is a lot lower. And so one of the advantages of that sort of process, you know, that the 500 startups, the Y Combinators, all these, you know, groups promote, is to really get you to be concise in your story.
yeah, because you only got a few minutes to pitch some of these investors. If they're looking at your deck via email, you know they're skimming half of it. Let's shift gears. Christine, you know a thing or two about fundraising. I remember you're a regular fixture at ArcView's investor forums, but now you're on the opposite side of the table with the People's Group Fund 1, $50 million fund focused on female and BIPOC founders. How does fundraising for an operation differ than courting LPs for this fund? What has been some of the most unexpected challenges?
I think raising capital always has both expected and unexpected challenges, but I think especially when you have a fund that is specific to a group, right? Like women founders, right? Women cannabis plant touching founders, right? People, I always make this comparison. When you're looking at large companies, not just in the cannabis space, you'll be like, we have great DEI initiatives, and all of the people of color or women of color are in like human resources and marketing. None of them have access to the P&L. They don't manage the P&L. It's kind of the same thing with funders. They're like, we would love to fund whatever ancillary business any woman wants to do. If you got a pink, you know, whatever, we'll fund that. But we're not going to fund founders that touch the plant because, and this has been such a crazy thing, it's just not a feminine thing. They don't see that as a feminine, that we're going to, like, that's plant touching, that's growing cannabis, that's in the dirt. And that is for the men folk. So like, that's been like the weird thing for me to be like really pushing to say cannabis founders who are of color, cannabis founders who are women are, in my opinion, the best bet in the cannabis industry today. So that's been a really weird challenge about what LPs think are appropriate funding models for women and people of color.
Excellent. Of course, you know what I'm really, and I'm sure a lot of people on the webinar are very interested in hearing about, is what is your specific selection process, consideration, criteria that you look for when it comes to finding a startup?
You know, it's such an interesting thing because when we're talking about marketing, we always think about visual, right? The visual deck, the visual. For me, because I, like Aaron and other founders, have literally written their decks for their operating companies 75,000 times. Like, I'm exactly with Aaron. I have redone my deck hundreds of times, hundreds. And that's a lot of work for the founder. But you know what? That's also a lot of work for the funder, right? That's a lot of work because I've got to decipher from 10 pages or 11 pages what your actual idea is. I've got to figure out if I understand that. And for me personally, this is not for any other funds, but for me personally, images do not give me the depth that I want to know what you are. And where we are in cannabis now, see, 5 years ago, people would fund you on a dream. I have a dream that I'm going to do this. I have a dream that I'm going to do that. And people are writing checks, right? Today, in this environment, you talked about at the beginning around it's only debt available, because now, as you see, not just in our industry, because where Weedmaps just let go of 25% of their staff, where Amazon's letting people go, Facebook's letting people go, is investors are like, I don't care about your damn dream anymore. Show me the money, right? And that's where they're going. So everybody's having to like, all of the extra people that they think is extra, I'm not saying that they are, they're trying to get away because they're trying to show profitability, right? They're trying to show that. That's hard for me to understand when I have this really kind of, usually on a deck, we have 1 or 2 pages that show like the financial overview, right? And then I have to go into the data room, and that's cool. But what's the narrative? And so that's why we've really transitioned to investment memos. My preference is to have the founders write an investment memo that tells me how they get to profitability, because that's a different thing than showing a bunch of visual pretty pictures. Because pretty pictures, I've seen beautiful decks, but if you delve deep into the deck, they say nothing. They literally say nothing. And so having the investment forces the founder to be like, this is how I get to profitability exactly. And then I get to ask questions about that. And so that's just a faster point than having to wait for the deck, then going through the data room. If I get the investment memo, I will know pretty quickly whether I'm going to invest in you or not, because I will know if you have that.
Let's double click on that a little bit. You know, what is an investment memo? Who are these for? Why are they more impactful?
You know, investment memos, they're called something else. I can't remember, but they come out of Amazon. It's sort of like like when somebody wanted to do a new thing in Amazon, he had to write a 1-page memo. If you couldn't advocate what that 1-page memo, what was going to make it valuable, they didn't even, like, you had to bring it to the meeting. So that's kind of where they started, where I first heard about them. So when you're putting an investment memo together, you're saying, this is my idea. This is my market. This is how I'm going to capture my market. This is how much money I need. And this is how much money I'm going to get from the money you gave me. This is how I'm going to spend it. And this is how you exit. It's really 5 pieces, right? That any investor, including myself, wants to know. What's your idea and what makes it special, right? What makes it special? What do you need the money for? Like, what is it going to be used for? You'll see that often they'll be like, and I used to do this too. Everything I'm saying is no shade to anybody, because I've done all of this. Every mistake I'll talk about, I've already made that mistake. So I'm not throwing shade to folks, but you'll see like use of funds. And it's like 5 million for this, 15 million for that, 12 million for this. And I'm like, so you need $12 million for payroll? I mean, that doesn't make any sense to me. But if you write it and you're like, look, these are the 5 people I need. I need the chief information officer. I need the chief revenue officer. These are my 2 most important people. Here's why: because the chief revenue officer creates money for the company, and the chief information officer makes sure that my tech stack is working with the revenue officer so that we can move money quickly through the company. You write that in a memo, I immediately understand how much a chief revenue officer is going to cost, both for the base salary, plus for their compensation packages, plus for their commission packages, right? I know that as an investor. But if you show me that on a use of funds slide where it just says $5 million for people, that doesn't make sense to me, and it makes me sus. So being able to like really let you go into that, and your investment memo doesn't have to be long. It can be a page, it can be 2 pages. Please don't make it over 2 pages, because that's a book. You can use bullet points. It's just telling me. And then from there, I might ask you for your pitch deck. I might be like, okay, I got this. I might not ask you for your pitch deck. I might ask you directly to go into your data room.
What's the single most important part of the pitch to you?
How am I going to get my money back? Plus interest, plus profit. That's every investor that I've ever known. And I'll be honest with you, when I started raising capital in 2017, I didn't really know that. Like, I didn't very much, again, Aaron and I are very much on a very similar trajectory, is that I didn't know how to raise capital. I'd only raised capital once before. In 1994, I raised $500,000 for a tech company that I started, and we sold it within 18 months. So I'd never had to raise a lot of capital. So it was really the first time I was raising capital. And everybody thinks like, I love your idea. They're going to be, no, they want to know, how does your idea triple their money, quadruple their money, or if you're in tech, 10x your money. And this is the thing that I think tech has done such a disservice to the cannabis community, is that we are not tech. Cannabis touching, plant touching people are not tech, we're ag, right? We're ag. And so many of the early investors came in and they were writing these big checks to these big companies, to the MSOs, as Jeff pointed out, and then was just shocked that they lost all their money because it didn't come back in 3 years. And it's like, it's ag. Ag doesn't come back in 3 years. Ag is a long-term investment. And so, yes. And what thing that really kind of chaps my hide, to be honest with you, that's my Texas coming out, is that there's so many technology companies that have been built on the backs of the cannabis companies who can't afford their technology because the investors are not investing in the ag part of how this becomes successful for tech. And the short-sightedness of that is really infuriating as somebody who also has a plant touching company.
Absolutely. And then you have the investors looking for their 100x returns, the crypto guys. This is probably a popular question here, but how do you find deal flow for these startups that hit your criteria? Are you hitting events, you attending accelerator demo days, venture scouts, or is it all just via your personal network and connections?
I have to be really honest. It's really been through my personal network and connections. Coming out of the legacy market, we know a lot of people. And then I've also met a lot of people. And this is where it becomes really important from a marketing perspective, is that use your networks. I have been introduced to many of the people in our deal flow throughout the US just through somebody who met me and I'm like, oh, you don't fit our thesis. You're not our thesis, but this is our thesis. Like, again, Aaron said in the beginning, knowing your investor's thesis is important. And I've always told people, like, don't burn a bridge. If somebody doesn't invest in you, don't burn that bridge. It's not something about you. Don't take it personal. But they might be like talking to somebody else. I've done this several times where I'm talking to somebody else and they're like, I'm looking for this. And I'm like, I got the person for you that I didn't invest in, but not because they're not great, just because it didn't fit our thesis. And so I ask and encourage the people that I talk to also bring me people that they trust, right? Introduce me to people that you're like, okay, I didn't fit that, but my friend over here, that she fits that, or he fits that. So I want to introduce you. I want to make that introduction.
My favorite thing, just to piggyback on that, my favorite thing to advise other founders or entrepreneurs on when they get a no is to ask, thank you so much, why? And then my second thing is, who else do you think would be interested in this? Because the best connections I've made have been from investors who have said no, but have done exactly what Christine just did, which is, actually, I know this person really is passionate about investing in women, or this person's really passionate about your gummies because they love your gummies, or, like, you just don't know. And if you don't ask, you're not going to get it as an entrepreneur. So like every no can be just as powerful as a yes, to be frank, because it creates that authentic, immediate connection to a real potential investor who is probably interested in your deal.
And I think that's so important because for me personally, we led about 3 SPVs into companies that we didn't necessarily invest in ourselves, but knew the investors, which were smaller investors, and people of color, which is kind of our lane. And they wanted to invest. But they didn't know how, and it didn't meet our thesis, but it met their thesis. So we just created the SPV to bring those people in to be able to move that money into these companies. So that's another way in which we were helpful. We didn't personally invest. The fund didn't invest in that particular company, but we were able to raise capital through our networks because it was a smaller raise, and be the SPV for those groups of people to get into this company.
Excellent. Thank you, Christine. We are going to shift over to the open response questions here. But, for those who don't know, I'm Jake Kuzarak, an LA-based cannabis consultant. I do a lot of work with brands, genetics companies, former VP at ArcView, managing director of ArcView Consulting. I ran Founder Institute's accelerator for San Francisco chapter for a couple of years. And I've been in the trenches raising money for my own companies. These days, I'm helping Blue Sky CBD with partnerships, handling expansion work for people like Garden House. I do a lot of mentoring with 500 startups, Alchemist, Ease Momentum, and a ton of different venture scout roles. But the reason I bring this up is I crafted a little shared doc. It's in the bio on my LinkedIn with some fundraising tips and tricks. In case this is valuable, it's just free resource that I hammered out a bunch of ideas. So if you want any of those takes, head on over. But let's shift gears for the open questions here. So if any of you has an answer for this, feel free to jump right in.
Can I just make one point that I feel like we missed in your questions? Is that I feel like for the lens of marketing for fundraising, don't underestimate the impact of PR. Because one of the things that we have done at Garden Society that's been tremendous, my co-founder Carly, she came from PR, she's incredible at storytelling. And I feel like part of raising capital is being known and having some buzz about you. And if you can use any success of your business you can't just write a press release to write a press release. It's got to be relative. It's got to add value. Like there's a lot more knowledge there. But like if you're going to raise capital, like definitely have a PR strategy and plan and certain milestones, because if you are the buzz or the talk of the town, it is going to be much easier to raise capital than if nobody knows who you are.
That's so true, Erin. You know that I wrote to my PR company right after we had the pre-meeting for this, and I said, I need to know how many impressions we've had, because you had said some large billion impressions for your company. And I'm like, I need to know how many impressions our company has gotten, because it had not occurred to me that way. And I was like, they came back and we have a lot of billions too. It's really cool. But yes, I 100% think that that is so important to find, either have a PR strategy internally, hire somebody, which is what we did, to make sure that you have your PR out there.
And it doesn't have to cost a ton of money. You can find good PR for $5,000 a month. But if you're going to raise capital, it's so critical. All these public companies have, you know, in-house and external PR firms. And the other thing I think is really important is like understanding in that PR, like what is the message you're telling, because that message should relate to your deck. It should either be like your new products or your new markets or whatever. So it's all relative and tied out. And that investor you will get Googled. And so that investor can Google you and can see what you're doing, and it aligns to your deck and it aligns to your message. And it's been tremendous. Like one thing that's interesting for us is everybody thinks we're a lot bigger than we are because we have incredible PR. And they're like, oh, Garden Society's smashing it. And I'm like, oh, aren't we? But at the end of the day, like, you know, it's core to our strategy and has been incredibly successful for us.
Yeah, I think Bill Gates famously said that if he had $1 to spend on his $1 to spend on his company, it would go into PR, which I think every PR firm has somewhere on their website, right?
Yeah.
So this was a perfect segue into our first open response question, which was, how does one approach launching a campaign to attract investors? So PR, step one, pitch brief, pre-pitch deck, step two.
I think LinkedIn is a great place to build like B2B relationships and awareness for your brand. Especially if you're leaning into PR, and you can't promote cannabis products on LinkedIn, but you can promote cannabis articles and news press releases. And so, the value of a press release are the organic impressions that you get with the various media properties. But because you can do really targeted spends on LinkedIn, you can increase the reach of any content that your company creates, PR or otherwise. So I think LinkedIn is a great place to kind of like focus from a social standpoint if you're at the fundraising stage, and be ready to be active. Make sure that again it's set up to make a very strong first impression as you're creating dialogue around the PR releases, which is vital, very, very important. Great point, Aaron.
What marketing efforts do you feel really resonated with investors?
I mean, email is, probably like number one. It doesn't get the respect. It's not as cool and flashy as other mediums, but, email, and there's these automated platforms out there that can make your, outbound email a lot easier. Prospect.io is one that I've used for a very long time. And, the advantage of using an email marketing platform is it makes it a lot easier to make sure you're sending those outbound emails every day. But also it allows for reporting and analytics. So, is the message, working? Are people reacting to it? Are they clicking on the links? So email is probably one of the most important, behind most likely, PR and content. PR and content is a great way to kind of build a brand to an investor audience. Sorry, Aaron.
Oh, no, sorry. I didn't mean to cut you off. I feel like events are really critical for this, because at the end of the day, like, I think there's so few cannabis investors, they're going to invest because of you. And so the more FaceTime you can get with people, like, I don't send anybody a cold call deck over email unless I know they're interested. Like, I try to get them on the phone. I try to get them on Zoom. I try to get them somewhere. I try to get in front of them and say, hey, this is who I am. This is what I'm building. I heard you're interested in this. I would love to have a 30-minute call. I also try to keep it to 30 minutes at first, because nobody has extra time in the world. And the more respectful you are of your potential investors' time, the more likely time you're going to get. So like, I had a call that was 20 minutes that went 2 hours because the investor was interested, but they would have never accepted a 2-hour call from me. So I really think like you have to figure out how to get in front of that person, whether that's on Zoom, on the phone, or in real life. And then I also feel like when you start, like, this is where you need a network. Like, this is where you go to your friends and you say, can you give me 3 names? Can you give me 3 names? And you start to map it, and it's an ecosystem, and you got to build your web and ecosystem. And I can't give anyone my ecosystem because my ecosystem is personalized to me. And it's not that I don't want to share, but like, it's not going to be the same as their ecosystem. They need to build their own ecosystem. And if you're not willing to build your ecosystem of investors and people interested in you, you shouldn't raise money. Like, you know, you got to do the work to get the network. And I can give you names and make introductions, but if you're not going to do the work.
I also think for me, I have a lot of companies. I mean, we talked to many companies this year and last year. And one of the things I really appreciate is the stakeholder email. Even if I have not invested in you, they keep me on their stakeholder email. And that has gotten me to invest in people, because I didn't invest in them 6 months ago, but I kept getting their once a month or once a week, sometimes stakeholder email. And it was for I'm sure their stakeholders that had already invested, but also people that they had talked to. And, you know, they would put at the bottom, if you don't want to get this email, just let me know, no hard feelings, basically. But I appreciate the stakeholder. I'm like, oh, look, they're growing. Oh, look. And one of my favorite ones is where they're like, this is how much we've sold this month. This is how many impressions we got. This is the media that we've gotten. So it sort of, goes back to what Jeff is saying, is being able to say, like, here's what we've done since the last time we talked to you. And that actually really encouraged me to reach out to people and be like, hey, let's have a second conversation. And this could have been 6 months, 9 months, but that stakeholder email, and it's not fancy. Like, I don't want a constant contact or a MailChimp email. I want the email personalized, BCC me, but that personal email makes all of the difference.
That's actually how we got our lead for our A, is they told me no one is safe. And then we had a big hit with Chelsea Handler, and we had a stakeholder email go out, and they said, okay, we'll invest on your safe. And then we had another big win, another email go out, and they say, we want to lead your A. So you're exactly right, Christine, is that, like, just because it's a no doesn't mean it's a forever no. And like, right, building those relationships, like, this industry is too hard. Nobody's going to give you money at first glance. Like, they got to trust you. They got to see your work. They got to understand you grind. They got to know you're in it for the long haul.
Yeah, I think that's a really good point. I think in addition to sort of getting introductions on those, I'm trying to understand, like, what metrics people are looking for, right? Like, trying to understand if larger check writers are looking for a certain threshold of revenue or profitability or repeat customers. You're always going to be raising capital. It's just the unfortunate reality of most startups. And so if a no in round 1 doesn't necessarily mean that investor is going to be a no in round 2 as well. So, figure out what exactly they're looking for, figure out the metrics, and then report against them in an ongoing basis. And, actually executing against your plan can lead to incremental investment down the road.
Right. And look, those emails get shared around. Have any of you considered crowdfunding? This is one of the Q&A questions, and I want to dig into it. It's a hot button issue.
Well, the first time we raised capital, we raised crowdfunding capital. We just didn't have a crowdfunding platform. So we did this really crazy thing where we started 7 LLCs and took 35 investors into every LLC under the Jobs Act. So yes, I think that for some people, crowdfunding is an option, especially for people looking at smaller amounts, right? But and I'm sure Jeff will have something to say about this, but the deal is that it's marketing. If you can't just go up you can't pay $6,000 to go up on Republic or whatever the ones are now and be like, give me money. No, you better have a network. You better have a large network. You better have, it's just so much marketing goes into crowdfunding. It is not, in my opinion, it is not simpler, but it does give you access to more capital because you're not required to have accredited investors. So that means that your neighbor can invest in you. So that's true. But if you are a solo entrepreneur or you have a co-founder and the entirety of your network are your neighbors, no, don't do that. That's a waste of money.
Well, what was
I agree, right? Like, there are no silver bullets. Like, what works for me may not work for the next person, or what worked for Aaron may not work for Christine, what worked for Christine may not work for, me. And so I think, like, in an environment where equity capital is so scarce and the investor pool is so small, you really have to look at anything and everything. And if you're a great storyteller and, you have the ability to tell stories visually, then I think fundraising or fund crowd platforms are a great thing to look at. If that's not your strength and you don't have the ability to create a really captivating video or marketing message, that may not be the best platform for you. And so I think, look at where you think you're going to have the most success based upon your skill set, and kind of lean into those sectors, but don't leave any, rock unturned.
Okay. So do any of our panelists need to drop, or can I add a couple extra questions here? All right, let's just ask the question. This is always hot, but what was the biggest waste of time for you when it came to fundraising? Where'd you make some mistakes?
Oh, I feel
I don't think we had that much time.
I made two mistakes. I made two major mistakes. Mistake number one is I pitched the wrong people early on, a lot. I travel around the country going to visit these funds, and I realized these funds were never going to invest in me. So understand how much money you need, who you need it from, what they invest in, who they've invested. If they're only tech and you're a CPG product operator, why are you going to a tech fund? So that was my one mistake. And then my second mistake was not driving to an answer faster. You can, as an entrepreneur, it's very easy to feel that the investor holds the power, and you want to be kind, and you want to be patient, and you want to answer their questions. But I have learned through the process to get to a yes or no, or I need this very quickly, because you can spend hours and days and years talking to people and they're never going to invest in you. So you got to learn how to not be pushy and aggressive, but to drive to that decision point. Because if you're talking to an investor who's never going to invest in you, but they're not going to tell you no, you're taking that time talking to them continually. You could be talking to somebody else who will invest in you. So it's your opportunity lost. And raising money is a full-time job. We all know that. So I try really hard to have a funnel, have a timeline, be rigid about it. I track how many meetings I have with people. And am I just shooting the breeze, or am I actually genuinely answering questions that they're authentically interested in? And I don't want to rush somebody, but there's a difference between giving information, because investors love to talk to entrepreneurs because they learn. And so you're feeding their information. So are you feeding them information, or are they authentically asking questions about your business so they can make a decision? And that, I think, is the secret sauce of how not to waste time.
A fast no is way better than a slow maybe.
Mm-hmm.
Excellent. Great answers there. I want to grab this one from the audience here from Miriam. Why are cannabis investors drying up if the legal industry is only in its infancy?
I mean, 280E, not having access to safe banking, we have a bunch of, the ATMs all got shut down last week. Every time we are ready to be amazing, it's they're no, you are not allowed to be amazing. And the thing that's so upsetting about that is that investors have comfort when they see that you have access to things outside of their own money. Even for our LPs are well, what else does this company have that they can leverage? What else can they do? If they could, I don't know, go to the SBA and get a loan, that would be very helpful. If they could, I don't know, go to the bank and be here's my $1 million in monthly receipts from my sales and get a loan at a low interest rate. That would be really great. If at all, the thing that the government has done for every other industry in the history of the US, which is subsidized new industries, if we had the government banking us instead of trying to kill us and subsidizing that would make investors excited to invest. So the reason it dries up is not because of anything I think the cannabis industry itself is doing. It is what we are constantly engaged with, a fight with our own government, with our own municipalities, we just don't have that support. So I don't know that they're drying up. I think there's a bunch of people that would want to invest, but we are not, it's like having them walk through a bunch of cactuses and being you should be grateful.
I also think there's a little bit of, I think everything Christine said, but I also think there's a little bit of, it's a small industry, and there's a little bit of mirror where I'm asking the same people, the woman who ran our SPV, she's an incredible woman. And she had 5 people go to her and ask her to run an SPV after ours, because word got out. She ran an SPV for Garden Society. She's an advocate. She's a champion. And she's I don't have the bandwidth to run more SPVs, or I can run one more, or but people don't really understand it's the same thing. So I said, well, how do you find your version of this woman? Like, we all have to have responsibility to bring more people into the industry. There's a lot of wealth that's been created over the pandemic with the stock market and the environment there is. So there's a lot of people with high net worth. They might not be current investors in cannabis, but I think it's really important that as you're raising capital, you're not just going to the same people, because the same people probably are over deployed. They haven't had any return on their investment. The public stock markets are in the shitter, and they're only getting worse right now because of all the regulatory problems. And so if you go to the same people that have been writing checks in the industry since 2019, odds are they got no money left to write checks. And they're like, I'm like pot subscribed in the cannabis industry. So if you're going to try to find new capital, like, you got to go say, like, hey, who's really interested in this and watching and not written a check into cannabis, or who's a female entrepreneur investor? Like, some of my biggest checks are people who have not been in the cannabis industry because they're impact fund managers or impact investors, or they're, women who want to get into the space and start being an angel, etc. And so I think it's I don't think it's drying up. I think it's incredibly difficult. I think it is drying up from the current pool, but it's our job to grow the pool.
And I agree with that 100%, Erin. That's what we've been doing. I mean, there's a ton of money to be deployed from people of color communities. And we're talking accredited investors who have never had access and have never heard of a family office. They have millions of dollars, but they don't have a family office. Why don't they have a family office? Because we were never taught to have family offices. We just got, one of our groups got $400,000 from a great group of people that own hair salons, right? Because that's where the money is in communities of color, is like in different restaurants, chicken and waffle joints. Like, there's a ton of money there. But not only do you have to get them to be, they want to invest in cannabis, it comes from their community. They have to be taught how to invest in cannabis, because they've not invested in anything else. They've not, yes, they're an accredited investor, but they're not investing like they have like a 401k like everybody else. So teaching them how to invest in these new communities, there's plenty of money. It's just not cannabis money. And I agree with you.
Yeah, I mean, most cannabis investors have lost money over the last 4 years, right? And 2000,
they didn't invest in me and Erin.
2017, all the MSOs were trading at like 100x, forward revenue, and the brand companies in California were trading off of revenue where there's 6,000 dispensaries across the state of California. And, we're in a difficult environment. All the publicly traded companies are down and to the right for various reasons. But when the market comps, are trading at really low multipliers, which are most of the pubcos, that's what the investors are looking to for market comps to create valuation. That has a trickle down effect onto small, startups. So again, what I would suggest is, exactly what Erin and Christine were saying, look for new investors, people who have been on the, periphery up to now, who love the space and are passionate about cannabis. It's not a super high growth sector like others that investors are distracted by. So there needs to be a belief in the purpose, purpose of the plant, purpose of the community, purpose of the opportunity it creates for, founders, female founders, people of color, like it has it in other industries. And, those types of investors are out there, but you got to turn over a lot of rocks.
I would say Kevin O'Leary and Wendy Berger, two people near and dear. One I know, one I don't know. So Kevin O'Leary said 80% of his returns on investments had a woman as a co-founder or founder of the company. So if you look at where, from a Shark Tank entrepreneur investment lens, women deliver better returns on investments. And then if you look at Wendy Berger, she actually said in Benzinga on the main stage in the keynote that she invests in women because women have compressed valuations compared to their male peers because they're so disadvantaged at raising capital. So if we take the emotional side out about I invest in women because they're women, no, bullshit. She said, I invest in women because I get a better deal and I get a better equity position, or I get a better investment and I get a better return. I'm going to get a better return and I'm going to get a better deal. So why would you not invest in a woman compared to her male counterpart or male peer? And so I think people are really starting to recognize, like, my valuation is lower than my peers because that's just the reality of what I face on a daily basis, public market comps, yada, yada. So I just encourage more people to look at women founders. I think there needs to be more diverse capital at the table and more diverse founders invested in with the capital that's at the table. And that's when the industry is really going to start to change. The echo chamber has resulted in where we're at today. And this is our opportunity to pivot the echo chamber into something that reaches its true potential.
Final question here. Oh, sorry, go for it.
I was just gonna say, I just agree with Aaron always as usual. And also I'm declaring 2023 the year of the woman in cannabis. Like that's the year, because everybody has lost their shirt on these MSOs, like Lloyd has pointed out. Everybody's lost their shirt on a lot of these larger companies, but the companies that I've seen that have really been successful have been the women founded companies that are still running, still making moves, and even in a dry funding era, still making it happen. We get it done.
Well, final question here, and I always want to ask this because it gives you a chance to shed some light on people who are doing things right. But who or what inspired you the most in 2022?
2022. Are you talking about other companies, founders, generally?
Founders, companies, organizations. I mean, anybody who's putting a good face on this industry.
Well, yes, I have a shout out for Collexium out of Detroit. They are an African-American women-run cultivation and manufacturer, and I have been in conversation with them for about 3 years, not around funding, just as operational companies together, and have been very impressed by what they have been able to accomplish with also struggling to get money, but they still made it happen. So I really want to give them a shout out. They're very inspiring to me and to many people in our community.
That's awesome. I just want to give a shout out to our team. We have an incredible team at Garden Society, and it's been a grueling year as we're going through this high growth mode, expanding into Ohio and expanding into Jersey. And my dad's been going through cancer all summer, so I've been personally really overextended, and I'm just inspired and in awe of what good people who get together and are passionate can do. And, you reap the benefits of the team you have. And so I just couldn't do this without my co-founder, Carly, without Brooke, our head of sales, without my entire team, Lindsay down in LA, Jose up in Cloverdale. I mean, just on and on. The list is long. So to me, that's my inspiration.
All right, Jeff, take us home.
I'm sorry, what was the question?
Who or what inspired you the most in 2022?
I mean, I'm pretty inspired by Aaron and Christine right now. I mean, let's give it up. We've got 2 female founders who have been able to raise capital in, the most difficult capital environment I've seen, and I think many people have seen in quite some time. And I think it's really inspiring. I think it's inspiring to see 2 very intelligent and challenging people succeed who happen to be female. And that's inspiring.
Hey, Jeff, you want to write us a check?
Aaron, if I had a check to write, I would write you one without hesitation. You would get my first check. Christine, you would get my second check.
Got you.
All right. Well, I want to give each one of you a chance to just give a little closer, the status of any current or future fundraising or expansion, or what investors need to know about your companies, but a little closer from each one of you, if you wouldn't mind.
I mean, just watch for us, Garden Society to the Garden State in 2023, baby. We're going fast, so it's an exciting year. And if you see me, I'll have a sweatband on because I'm working my tail off. But here we go.
Well, we're headed to New Mexico next on our journey. Really excited to be in the New Mexico market. And then we have a couple of things happening on the East Coast that I'm not at liberty to talk about yet, but we hopefully will be there by mid next year. So super excited about that. And of course, really excited to work with other founders. I'm always open. My door's open. I spend a lot of time advising. So would love to talk to you if you have any questions. I'm pretty open about what we've been through. And I feel like that's very helpful so that you don't have to go through it too.
Jeff, where can we find out more?
I think just do this for love, right? Like it's a really hard industry. Don't get discouraged. It's hard for everyone. Think long, right? This is definitely not a get rich quick industry, and those that think it is get slow poorly. So, realize this is just the beginning of the industry and everything is figuring itself out. And, I'm excited for what we have ahead of us and all the challenges that it includes.
Well, I want to give a huge thank you, not only to our amazing panelists, Aaron, Jeff, and Christine. We also want to shout out Brian Gilbert, Eric Becker, and Lorna Donahoe of NCIA's Marketing and Advertising Committee, who put all of this together. Thank you all for joining today. Head to thecannabisindustry.org for info on upcoming webinars 2023 and the 2 more before the end of the year. That's it. Thanks again for joining.
Fantastic. Well, thank you so much, Jake, for leading such a powerful and inspirational program today. I mean, I alone probably took 20 key takeaways at the bottom of your Run a Show document throughout this. So I think we've got a lot of fodder to continue to promote this program after today's broadcast. And I know that the audience members are taking a lot away from today's conversation. So thank you all so much for working with Eric, Lorna, and the rest of the Marketing and Advertising Committee over these last few weeks and month or two to get this program developed and broadcast to our network. So as always, we're going to close out today's program while the panelists head into the backstage with a quick review of some upcoming NCIA activities that we'd all love your all's participation with. If you haven't already, do make sure that you're signed up for our weekly Events Digest newsletter that goes out every Monday afternoon. That'll keep you up to speed on all of these upcoming virtual and in-person activities, as well as provide you all supplemental resources to make the most out of your participation with all of these events, including blog posts, formatted video recordings, contact information for all of our panelists. And speaking of that, do take the next few minutes. I saw Christine was dropping them in there as well to pass around those LinkedIn URLs, get those connection requests in, and make sure to pass along any appreciation or questions to the panelists while we have you all for another few moments. And in case you did miss it, we just announced the Q1 series of our in-person events taking place across the country, all leading up to our 11th annual Cannabis Industry Lobby Days next May. We'll be making stops in our most established markets, bringing NCIA's industry-renowned networking experiences to your neck of the woods with a brand new batch of Cannabis Caucus and industry social events taking place in Florida, Illinois, Massachusetts, Michigan, New York, Northern and Southern California, Colorado, Oregon, and Washington State. And as I said, these will all be leading up to and into the 11th edition of our annual Cannabis Industry Lobby Days, NCIA's biggest and well-attended advocacy-focused event of the year. So as all of the panelists were mentioning about the problems that are really limiting and impacting the industry at large, especially on the investment sector, you cannot have a more, you can't play a bigger role in helping us accomplish and achieve those goals by participating in our 11th annual Cannabis Industry Lobby Days next May. All right, and with that, well, as always, we'll leave you all with this end of event credit sequence highlighting all of our blooming and evergreen members amongst our amazing network of cannabis businesses nationwide and globally. I look forward to seeing you all again for the final 2 industry essential webinars of the year that are being produced by our Cannabis Manufacturing Committee and Hemp Committee next Wednesday, and then also our final fireside chat with our government relations team featuring John Hudak next Wednesday as well. So if you're interested in participating in those events, I think you all be directed to the events section of our website after today concludes, but stick around for a few minutes. And if you don't see your business here, that just means that you need to head to thecannabisindustry.org/join following today's session to join the movement for a responsible and equitable cannabis industry. Enjoy, and we'll hopefully see you all again next week for another Industry Essentials educational webinar. See you all then.